What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you how I feel about the market conditions as well as which stocks are at the top of my watch list going into the week ahead. If you get any value out of this video, remember to click that like and subscribe button. Let's jump right in. Okay, so to start us off here, we're going to take a look at the indices, starting with the NASDAQ, and as you can see, we had a pretty significant pullback on the NASDAQ last week. It looks like Wednesday we kind of gapped down. Thursday was a bit of a choppy day, and Friday we kind of solidified that lower position. It's a little bit disappointing because this 14,500 level was a pretty key level where if we were able to break above that, that would have been a very bullish sign. But the fact that we got rejected at 14,500 is a very bearish sign, and it indicates that we probably have a pretty good likelihood of coming back down to 13,000 here. And if we break through this previous low, that would be a very, very bearish indication, and I would be pretty concerned at that point. But as of right now, it's a bit of choppy trading, and we're definitely not in a bullish position. We're more so in a bearish trend right now than a bullish trend. But it is a little bit choppy and a little bit sideways right now as well. So that's where we're at on the NASDAQ. The S&P 500 is pretty similar. We traded down lower last week. Again, we got kind of rejected at a crucial level here around 4,600. The reason I say that it's a crucial level is because this same level acted as resistance back here in February. So fairly important to take note of that. And then the Dow Jones, fairly similar chart. We didn't quite make it up to the previous high here, but we did trade lower over the last week. So not a great week in any of our indices there. And when we look at Bitcoin, it was a pretty much sideways week the entire way through. We kind of traded sideways along our support line right here. And as of right now, we have resistance around 45,000. We have increasingly higher lows coming up on the price right here. This is creating an ascending wedge here. And hopefully we see a strong breakout above 45,000 here with enough strength to stay above 45,000. That would be the bullish case of what we were looking for. But if we break through this trend line that we are kind of sitting on right now, that would be a very bearish sign or a very bad sign for anybody holding Bitcoin or mining Bitcoin like myself. Now, here is what the earnings look like for this week. We got a couple of big companies reporting, including a lot of banks. So on Monday and Tuesday here, we got a lot of banks reporting. We got First Bank, we got Service Bank, we got First National Bank, we got Bank of America, we got Charles Schwab, we got BNY Mellon. So lots of banks are going to be reporting this week. We also have Netflix reporting, we have Tesla reporting, we have ASML reporting on the same day, we have Snapchat coming out the next day. Then we got a couple of airlines coming out. We got American Airlines and I think United right here. And I think there was one more. So it's going to be a busy week for earnings. We got a couple of very exciting companies. Probably most eyes are going to be on Tesla right now, especially with Elon Musk's recent bid to take over Twitter. It's going to be very interesting to see how that plays out. If you don't know about it, Twitter is currently taking a poison pill to try and dissuade Elon Musk from buying the company. Very interesting business case. If you want more information on it, leave a comment down below and I'll make a full video kind of explaining what's happening. But this is literally the pinnacle of business strategy that is unfolding with some of the richest men in America right now. So definitely something that if you're into this kind of thing, this is like the Super Bowl right now, and it's something you want to be aware of. Now, in market trends here, we had some news come out last week that inflation just hit 8.5% in the United States. And this is the highest level of inflation that we have seen since the 1980s. So probably, like me, I was born in 1994. So this is the highest level of inflation that I've ever seen in my lifetime. And probably for a lot of the viewers here, it's going to be the same thing. And it's something that probably none of us have had to encounter before. But we need to start thinking about how do we manage it and where do we put our money to take most advantage of it. And so the question that you want to ask yourself is, what industries do well in times of high inflation? And one of the industries that seems to do very well in times of high inflation is consumer staples. And when I say consumer staples, I mean things that consumers buy literally on a daily or weekly basis. They buy it consistently, they buy it regularly. And I'm talking about the companies and the products that facilitate that. And the reason it's important is because they're such a staple of our culture and of our economy, they're reliable and they are consistent and people are going to continuously buy them. And thanks to that, these companies usually pay a dividend that is usually fairly safe and usually fairly steady. In this example, I'm talking about consumer staple companies. These could be companies like Costco, Walmart, Kroger, or Coca-Cola, all of which pay a nice and very steady dividend. And so this could be one area that you may want to look at least for a short-term trade while we go through this super high inflation period. because most of these companies are becoming slightly more attractive and will likely do well even if the S&P 500 and the NASDAQ and the Dow Jones continue to sell off. These companies will probably continue to do fairly well because they're safe, or at least relatively safe investments, because people are still going to be shopping at Costco and Walmart, especially if inflation continues to get higher. People want the cheapest place to shop, and so Costco and Walmart are number 1 and 2 for that. And so it makes a lot of sense that these stocks do well even in times of high inflation or when the economy is not doing so well. And when you look at the trend and you look at the consumer staples index, that's what I'm pulling up right here. Ticker symbol is XLP, and if you look at it right now, it is at an all-time high. It has never been this high. Consumer staples companies have never done so well, and we're going to look at an example of one in just a few minutes here. But here's the main thing that I'm trying to get across to you is you need to understand what is happening in the market to find the best opportunities. It is very, very clear that money over the last few months has been shifting away from technology and into safer companies that pay a dividend or that have very steady cash flow or that are in the energy business, because there's a lot of opportunities there and there's a lot of risk in the technology or in the growth space right now, especially with the inflation and the rising interest rates. And so the money is shifting, and if you can understand that and see where the money is shifting to, you can use it to your advantage to make better investments, better trades, and get a better ROI on your money. Now, if you are curious about what platform I am using to pull all these charts from, I am getting them from Questrade. I use it for all of my day trading and long-term investing, so if you're interested in checking it out, there's a link down below that'll give you $50 in free commissions when you sign up and create an account using that link. Now, let's take a look at one of these consumer staple companies, and Walmart is kind of the first one and the easiest example here, and it's also kind of a unique pattern because we have very, very clear resistance at $152 here. We got rejected in 2020, we got rejected twice in 2021 right here, and we just finally broke through $152 over the last 2 weeks here. So Walmart is at an all-time high just as inflation is approaching a 40-year high. And it's not a coincidence. It's because people like the dividend from Walmart, and they know that if people can't afford as much, they're going to be shopping at Walmart more often because it's a cheaper alternative. And so it makes sense. You just have to kind of think through it in your head. And what I also like about Walmart is as it has broken out through this resistance level over the last few days, it has also very, very clearly retested the exact same level. And I just think this is so cool because this is literally your very classic breakout, retest, and then move higher. And so what I am watching for now is we've already started to move higher, but we have found some new resistance at $158, which just coincidentally happens to be the previous high set just a few days ago here. And so if we can break through this $158 and kind of 41 cent level, that is going to be a very, very strong buy signal and bullish signal on Walmart, because it shows that we have confirmation of a breakout, we have a retest, and now we're moving higher and breaking through previous resistance. That is exactly what we are looking for as a swing trader, exactly what we're looking for as a day trader, and this represents a nice little entry point as a long-term investor if you like Walmart as a company. Now, next company I want to point out to you here is Callaway Golf. I've pointed this company out probably on a few watch lists now, and honestly this pattern just kind of keeps delaying and it keeps stretching out and it keeps playing forward. And so I am watching Callaway Golf for either a breakdown and a fall through of this sort of $22 level, or a breakout and a bounce off of $22 and a bullish kind of movement through this trend line right here that is very clear, very well established. And if we see that breakout here, I'm probably going to be a buyer because I think golf is going to grow exponentially over the next few years. I think travel is going to grow exponentially over the next few years, especially with the recent shutdown that we just had over the last 2 years. I think golf is going to on the come up. I think travel is on the come up, and I think the fact that everybody wants to go to Topgolf when they go to a warm place, and that's Callaway Golf owns Topgolf. I don't know if you know that, but I like the business model. I like what they're doing. I like how they're pulling in revenue in the golf industry in a variety of different ways, and I like the business. I don't own anything yet, but I am looking at it for kind of a medium, probably swing trade opportunity. But if it does break out and it just keeps running, then I'll hold it as a long-term stock. We'll see what happens when it gets to that point. But I like the pattern on Callaway Golf right now. I am being patient on it though. Now the next company here is Suncor. This is going to be a pattern that is definitely going to play out in the next week here. You can see we got rejected at $43 here at kind of middle of March. We got rejected again here at the end of March, and now it is the middle of April, and we are testing $43 again. If we see a strong breakout of $43.50 right here with good volume, that is going to be a very strong buying signal. We have a very clear level of resistance. We have very strong support on the bullish side, and I really like this opportunity. If we can see that buyers are really stepping in and they're liking this breakout, and the price of energy stays high, all of those stars aligning is going to make a great trading opportunity for Suncor over the next few weeks. Now, if you're interested in seeing when I get into these positions or when I exit these positions, definitely check out my Discord chat. I'm trying to build a community of traders to share their analysis, share their research, and come together so that we can all get better and so that nobody is sitting at home alone trying to figure out what to trade. I also post my buys and sells, I post my analysis, I post all my charts, and we have a daily market update as well as a weekly watch list that gets sent out. You can ask me anything you want, and it's only $5 per month. So if you're interested in that, definitely check it out. The links are down below for the Discord chat. But the next stocks here, I got 3 more for you in this watch list. The first one is UpStart. UpStart is a stock that I like. They're growing their revenue exceptionally well, exceptionally fast. If you look at the finances and you look at kind of the metrics to evaluate this company, they're doing extremely well. And that is why they got hyped up so much, all the way up to $401. But since then, they've now sold off to $82, and they are testing this $80 level of support very, very strongly. I don't know how else to say that, but they're testing $80 several times here. Once back in 2021, once right here in February, again in March, and now we're testing $82 right now. And it looks like we have some pretty good support here. Again, if it falls below 82, very, very bad sign, very bearish sign, but that is where I would put my stop loss, so probably $78, $79. Have a stop loss there, and that means that my risk is only just a couple of dollars. Or you could put it below 75 right here, and even at that point, your risk is still only like $8 on an $82 stock, so you're at like 10 or 11%. You're doing really, really well because the upside here can very easily take this stock to 150, if not 200, 250. And so I really like UpStart as a business. I like it as a stock, and it's something that I'm watching very closely. The next stock here is Graphex Group. I do think we're going to have a major shortage in materials that go into making batteries for electric vehicles over the next few years. And I think Graphex Group is going to be one of the companies that supplies that demand. And so over the long term, I think this company is going to do very well. I have taken some short-term positions in this with kind of mixed results lately. But as of right now, I'm pretty interested in it. We do have just a small level of support right here, around $3 and kind of 20 cents, and we're starting to bounce off that level and break out of this previous trend line right here. And so I'm looking for the short-term trade up to $4.50 right here, with a stop loss probably around $3 and maybe 10 cents, $3.15 if we see progress on Monday. So if we open red and the candle just breaks through this whole pattern, nothing is going to happen. Or if we gap up all the way to 4.5, then the risk to reward ratio just isn't there anymore. But if we just see some strong momentum, some good buying pressure, some decent volume and a green candle, that could be a great opportunity to enter into Graphex with a nice risk to reward ratio. And the last company here is Cardiol Therapeutics. This one is a little bit riskier. This one is a little bit smaller company. They are very, very exciting though. They're doing some great work. But the reason that I like this company is because they have a $123 million market cap right now, and they have $83 million in cash on the most recent balance sheet, which means like there's a ton of cash underlying this company, and they also have a beautiful pipeline of drugs in development right now, going through phase 2 and phase 3. So I think there's a good opportunity here. On Friday, we saw increasing volume. We saw a breakout of our trend line right here. We have already crossed through our 20-day moving average, and we have set consecutively higher lows. And so we have some very, very positive signals that we could be going through a trend change here in Cardiol Therapeutics. I think there's massive opportunity for this stock to run back up to around $6. And I like the management team. I've even made a video about them on my channel, so definitely check that out if you're interested. But in summary, for this video, what I want you to take away from this is you need to understand what sectors are doing well and where the money is flowing. One tool to help you with that is to build a watch list of the different sectors. This is something that I've done recently, and it has really helped me out. And basically all I've done is I've taken ETFs for all of these different sectors. So you can see communications, energy, real estate, consumer discretionary, consumer staples, healthcare, financial, industrial. I've taken all of these different sectors, put them into a watch list so I can see which sectors do well, which sectors are not doing well, and I can take a look and see kind of the overview every day. I highly recommend you literally just copy this right now, take a screenshot of it, pause the video, create your own watch list. I promise you it'll be well worth the time, and it will really help you out when you sit down at your computer for kind of the morning session, or when you're looking at making an investment. It's well worth it. Now, always ask yourself, what stocks are going to do well in this current environment? Currently, we have an environment with high inflation. We have some conflicts overseas. We have some other issues around the world geopolitically, and you want to ask yourself what type of companies or what industry is going to do well in these current conditions. Right now, I gave you the example of consumer staples are probably going to do very well, and so far they have done very well. And the last thing is, if we break through those key levels of support on our indices, especially on the NASDAQ there, you really need to make sure that you're managing your risk, especially if you have a lot of exposure to tech like I personally do. You need to make sure that you got some stop losses in place, and that you're not just going to ride these stocks all the way down, because there's a chance that we see a major correction from these levels. Like, these prices are still fairly high on some of these stocks, and so you need to keep that in mind. You need to manage your risk, and if you need some strategies for how to do that, check out my stock market fundamentals course. It is completely free. When you sign up with the link down below, you get a free trial to try out Skillshare, see if you like the platform, and then after that it's either a monthly or yearly payment. It is a fantastic platform. It's like the Netflix of courses, so you can take all of my courses completely free in the trial. Only keep the subscription if you like it. There's over 11,000 students that have taken my course, Stock Market Fundamentals. There's over 380 reviews for it. 1.6 million minutes of watch time have gone into that course, and it's hosted on Skillshare, totally free, with a link in the description down below. Sorry this watch list is so long. I had a lot to say, but I hope you got some value out of it. Thank you so much for watching till the end, and we'll see you guys in the next video. Talk to you soon.